This is video tutorial number 2, Pro-Forma Stabilized Income Property spreadsheet. My name is Jeffrey Smith. In this tutorial, we'll take a look at how altering some of the structured financing parameters can dramatically alter the valuation of the property. For example, we see here that the capitalization rate is calculated as 13.54% given these financing parameters. Basically, we want $25,000 per year cash flow after expenses and debt service, and we want that to be 100% return on equity, basically the cash on cash return. If we want to use a lower capitalization rate, we must change the gross return on equity. So we can use a goal seek, what if analysis, goal seek. Let's look at what a 11.5% cap rate does to the gross return on equity. Now we're at 59.1275% gross return on equity, and for that same $25,000 cash flow before tax net return, the max offer is now $845,630, and the net operating income must be at least $97,248. We can see here from the syndication parameters that the cash flow per unit, the yield, has gone below 15%. It's 14.78%. It's flagged in red as this is a very low yield on this investment, and therefore it's not a good investment for syndication. It's a great investment if you're investing the entire $42,282 of your own money to generate $25,000 per year in cash flow. Now let's go back to the 100% return on equity, and let's do a what if on incentive fees. Let's say that the primary financing wants 2% rolled in. You can see how it changes the annual yield constant. We can also add an incentive fee rolled in for the private preferred equity tranche of 3%, and you can see how that adjusts the annual yield constant. And let's say that this is not preferred equity. Let's say that it is debt, and it is seller financing debt. And let's change the amount of seller financing to 20%. Change the gross return on equity to about 60%. And now we can see that the cash flow per unit return on investment is now 21.1765%. That's about as low as you want to go. However, the capitalization rate has now risen to 14.13%. So you get an idea of how the cost and structure of financing affects the valuation of the property. You can see that the maximum allowable offer has jumped around from $500,000 up to $800,000 down to $400,000, with your cash flow before taxes remaining the same, just altering the yield on the investment, altering the cost and structure of the financing. This is why you cannot use comparable capitalization rates to value a property. You must value the property according to the available cost and structure of financing that you can apply to the purchase of the property. What other properties sold for in terms of cap rates is meaningless. You don't know how they were financed. You don't know the yields they required. What you do know is what financing is available to you and the yields that your investors need to make this deal make sense. This has been video tutorial number 2, Pro-Forma Stabilized Income Property. My name is Jeffrey Smith, and thank you for your support.